All right, welcome. I've been hearing a lot of people talk about how, it's bad that the Fed is hiking rates and that we just need to wait until they start cutting rates when we can go back to the bull run and things can be great again. So I want to take you to this chart here, and we're going to analyze the history of when the Fed starts cutting rates. Is it a positive thing for the markets, or is it a negative thing? What are some of the patterns that we can see from the data from the past? Okay, so this is the Nasdaq chart. So this is specifically for risk-on assets, technology stocks. So if we look back in fairly recent history, the last 23 years, after the dot-com bubble, I mean, it almost looks kind of similar to where we're at these days in some ways. If we look at the chart like this, like that down there looks, we can make it bigger here. That looks pretty similar kind of to where we're at right now in a way. Hope that makes sense. So, yeah, because the Fed was hiking rates, but then they paused, and the markets actually pumped when it paused, and then it started cutting rates. But look what happened. It was not a pretty sign for the markets. We saw this massive collapse. And ever since the Fed started cutting rates around here, the markets didn't come back to those previous levels until looks like towards the end of 2013. Wow, that's 13 years, guys. That is not pretty. So I mean, that is horrendous. So in that case, it was a terrible, terrible idea to wait until the Fed starts cutting rates. It was ever since the Fed started cutting rates, it was just horrendous. Okay, we just saw a massive collapse in the market. Then the Fed started hiking in 2004, and they paused, and the pause was pretty positive. The markets went up, but then when they started cutting rates, let's see, it was about right here. It wasn't so bad at first, but then we saw a major dump. Let's see if I can make this bigger here. Yeah, we saw this major dump, and then they continued cutting rates. We saw a little rebound here, but then major collapse again in 2008. So then we have this area here in 2019. The Fed started cutting rates, and you all know what happened then. We saw the collapse here. So, and now Fed is hiking rates aggressively. So we could see something very similar to what we've seen in the history back here. Now, oops. Now this was, only the past 20 years or so. But that's kind of the environment that we're in right now. Are we in a bubble? Well, a lot of people are saying yes. So if we see something like the 2000 dot-com bubble, we actually do look very similar to that on a bigger scale. And let's say the Fed starts cutting rates, then could we see this major collapse again? Or could we just see kind of a collapse and then a rebound? It's tough to say exactly, but let me show you something else here. Let's see if I can open this up. There we go. This is an analysis that I did in a recent video on my channel about, I analyzed the, so basically what's going to be happening is starting on March 23rd, Pluto is going to ingress into, from Capricorn to Aquarius, and then it's going to retrograde, and then back again in August, it's going to go back into Capricorn, and then it's going to ingress again into Aquarius next January, and then it's going to ingress again into Aquarius a third time next November of next year. So I looked in the history books, and I looked at the astrology. When did Pluto ingress into a new sign 3 times in a row? Because it retrogrades backwards each time, and then it ingresses forward again. And it was back in 1956 through 1958. And then I looked at the charts back then on the Dow Jones, and this is what the chart looked like. So when it almost looks kind of similar to where we're at now. And so Pluto's about to, each blue line represented when Pluto ingressed into the new sign again. And so, you know, the stock market almost looks similar to this right here. And so we're going to head into Pluto transiting into a new sign on the 23rd. That's about a week from today. So could we see a similar dynamic as this? It's going to be very interesting. I'll keep you all updated over the next couple of years. But could we see, you know, the stock market have a collapse? Potentially timing is like maybe the summer or Q3 or Q4 of this year. And then could we see a major rebound into next year, and then we see another collapse and then another rebound? So that's a definite possibility if history repeats. Now, it's not really possible to say that 1956 was exactly how it is today, because there's a lot of different geometries happening with the planets and a lot of different things happening, current events. But it'll be interesting to see if we do see somewhat of a pattern of a dump and then a pump, and then a bigger dump and then a pump again. So just wanted to share that with you. Subscribe if you'd like to see more videos like this. Let me know in the comments below if you think that we should be celebrating if the Fed cuts rates, because this ain't looking so good. If they for when they start cutting rates, it could be not a good time to invest. It could be a good time to get into cash. And then if we look at when they paused rates, it was actually quite positive when they paused rates. The markets usually you just saw a nice little run. The last time was here. We saw a decent run, nothing too crazy. So yeah, what do y'all think? Do you think it's because we see this typical narrative that it's bad that the Fed is hiking rates, but even through history, we look at these hiking cycles. Many times it was actually positive for the markets. But it was when they started cutting that was really negative for the markets. Okay, so even here they were hiking rates and the markets were pumping hard. All right, so what do y'all think? Do you think we should celebrate when they hike rates or when they cut rates? And when's a good time to be in the market and be out of the market? All right, talk to you guys soon, and definitely subscribe if you want to see more videos like this, and I'll see you on the next video.